Everybody wants to make a million, but almost no one can hold onto 10,000. That's the brutal truth I learned the hard way, and it's exactly what Jesse Livermore meant when he spoke about earning the right to trade big. You see, Livermore had this unspoken rule, what I call the $10,000 rule. It wasn't about the exact number. It was about the principle behind it. If you can't protect a small stake, you'll never survive with a large one. And that idea changed the way I looked at trading forever. Because in the beginning, I was obsessed with the big picture, the $1 million trade, the viral success story, the quick rise from nothing. I thought discipline would come after I made it. But I was wrong. Discipline isn't born from success. It creates success. Livermore understood that better than anyone. He didn't start with huge positions, he built them. Brick by brick. He'd double a small account, then take half off, testing his own control more than the market's direction. For him, every $10,000 earned wasn't just profit, it was proof that his process worked, that his mindset could handle pressure, that his emotions didn't own him. And that's what I want to talk about in this story, how Livermore used small, calculated wins to build a foundation of mental and financial discipline that could withstand the storms that wiped out other traders. The truth is, anyone can win once. But winning consistently, that's a skill forged in patience and humility. Most traders think, if I had a bigger account, I'd trade better. But Livermore knew the opposite was true. If you can't control yourself with small money, the market will never trust you with big money. He treated every dollar as if it were a test, not of intelligence, but of character. And if you think about it, that's where most traders fail. They don't lose because they lack a good system, they lose because they lack the discipline to respect small gains. We chase the thrill of more. We ignore the quiet success of restraint. And we forget that the foundation of every $1 million account starts with how you handle your first few thousand. I'll tell you something that Livermore's story taught me. Big wins feel great, but small wins keep you alive. The market doesn't care about your ambition, it rewards your consistency. It doesn't care what you want, it only mirrors what you are. It's strange, isn't it? The very hunger that drives us to trade is the same force that eventually destroys our control. I remember sitting in front of my screen one morning, watching a small position move in my favor. It was a clean, textbook setup, tight stop, disciplined entry, nothing fancy. A $500 gain. But as the candles climbed, something inside me whispered, "Hold on. Maybe this is the one. Maybe this is your breakout trade." That voice, that mix of greed, confidence, and excitement, it's intoxicating. And that's the paradox. The market rewards aggression just enough to make you think it's a skill. But the moment you start believing it, it punishes you without mercy. That's what Livermore meant when he said, "There's a time to go big, but only after you've earned the right to." He understood that our biggest battle isn't with price action, it's with ourselves. Our ego wants growth faster than our discipline can handle. And that's the paradox every trader faces. You want to grow your account, but the very urge to grow it faster makes you reckless. You want to trade bigger, but that desire blinds you to risk. You want freedom from financial limits, but you forget that freedom requires structure. The market is a mirror, and it reflects your emotional state with terrifying accuracy. When you're calm, it feels predictable. When you're greedy, it feels cruel. Livermore learned this the hard way, multiple times. He'd make a fortune, then lose it, not because he forgot how to trade, but because he forgot why he traded the way he did. He once said, "The human side of every person is the greatest enemy of the average investor or speculator." And that's the truth that defines this paradox. The better you get, the more confident you become. But the more confident you become, the more likely you are to break your own rules. In modern terms, it's like this. You start small, follow your plan, build consistency, and suddenly, you're up a few thousand. Now you feel invincible. So you double your size, take trades you'd never normally touch, and before you know it, you're back to zero. Not because the market changed, but because you did. You see, consistency isn't destroyed by volatility. It's destroyed by ego, by the illusion that you're smarter than the system that made you successful in the first place. And here's the scariest part. That voice that tells you you've got this sounds almost exactly like confidence. But it's not confidence. It's overconfidence. And the difference between those two is measured in how quickly your account evaporates. The market doesn't need to deceive you, your own mind does that for it. I used to think I lost money because my analysis was wrong. But over time, I realized something far more dangerous. I wasn't trading the market, I was trading my expectations of it. That's the invisible trap most traders fall into. You start projecting your emotions onto the chart, excitement, fear, regret, and suddenly, the candles don't represent supply and demand anymore, they represent you. You start seeing what you want to see. You hold losing trades because you believe they'll turn around. You exit winners too early because you're afraid of losing what you've gained. And worst of all, you start thinking you deserve to win. That word, deserve, is poison in trading. Because the market doesn't reward effort. It rewards discipline. Livermore understood that the moment emotion enters the equation, clarity vanishes. He once said, "A man must believe in himself and his judgment if he expects to make a living at this game." But believing and hoping are entirely different things. And that's where traders fall apart. We confuse belief with hope. We stop executing like professionals and start gambling like dreamers. Let me paint the picture. You've had a string of small wins, your confidence builds. Now every setup looks like an opportunity, every minor dip feels like a buy the dip moment. You start ignoring your risk plan because this one feels different. You increase your position size, convincing yourself you've earned it. And for a while, it works. That's the cruel part. The trap feels right before it collapses. Livermore called this the most seductive illusion in the market. The illusion of control. The idea that because we've made good decisions before, we can bend probability to our will. But trading doesn't work like that. The market doesn't care about your streak, your instincts, or your feeling. It only responds to structure. And when structure breaks, emotions flood in. That's when discipline is tested. Because in trading, success doesn't magnify your intelligence, it magnifies your weaknesses. And the more success you taste, the louder your inner voice becomes, telling you, "You've got this. You're better than the average trader." That's the moment the trap snaps shut. We forget that the goal isn't to feel right, it's to act right. Every trade should be a test of process, not a reflection of emotion. That's the core of Livermore's mindset. Control is an illusion, but self-control is not. And that's the difference between those who survive in the market and those who get consumed by it. Most traders stare at charts trying to predict price. Livermore stared at behavior, his own and everyone else's. He knew that the market was nothing more than a reflection of crowd psychology, the collective fear, greed, and illusion of control that drove prices higher or lower. But he also knew something even more powerful. The crowd wasn't just out there. It was inside him too. He once said, "There is nothing new in Wall Street." There can't be, because speculation is as old as the hills. Whatever happens in the stock market today has happened before and will happen again. What he meant was that every boom, every panic, every bubble starts in the same place, the human heart. And that's why he developed such strict personal rules. Not to beat the market, but to beat himself. Livermore's greatest insight was this. Success in trading isn't about prediction, it's about preparation. He didn't wait for the market to test him, he built his system to test himself. For example, before scaling up his trades, he'd first prove his strategy with small amounts, what he called testing the line. If the market moved in his favor, he did more only when confirmation appeared. Never before. Never out of excitement. Never because of emotion. He treated every trade like a scientific experiment, detached, methodical, emotionless. And yet, beneath that logic, he understood the emotional war raging underneath every decision. He said, "The game taught me the game. And it didn't spare me the rod while teaching." That's humility talking, The kind that comes only from being broken, rebuilt, and broken again. You see, Livermore wasn't immune to the same traps we face today, he just learned to expect them. He understood that after a big win comes the illusion of mastery. After mastery comes overconfidence. And after overconfidence comes ruin, unless you interrupt the cycle. His rule was simple. Let the market prove you right before you add. It wasn't just a trading technique, it was a philosophy of life. Patience before aggression. Proof before pride. Discipline before desire. And maybe that's the part most modern traders miss. We build systems to find setups, but Livermore built systems to control himself. He didn't rely on willpower. He relied on structure. And that structure became his shield against the emotional chaos that wiped out everyone else. The panic of 1907 wasn't just another sell-off. It was a full-blown collapse, the kind that turns confidence into fear and traders into ghosts. Banks were failing, liquidity was drying up, and the public was dumping stocks in sheer terror. But in the middle of that chaos, Livermore was calm. Not because he was fearless, but because he was prepared. He'd been studying the tape for weeks, sensing the weakness beneath the surface. The rallies felt forced. The volume patterns were off. And he realized this wasn't accumulation. This was distribution. The insiders were selling while the crowd kept buying. So, quietly, he began to build his short positions, small at first, testing the market's reaction, just as his own rule dictated. He didn't rush. He didn't boast. He waited for the market to confirm his suspicion. And when it did, when the tape finally broke, he added, layer by layer, until his position was massive. While others panicked, he thrived. By the time the dust settled, Jesse Livermore had made $3 million, an astronomical fortune in those days. But here's where the story turns. In that victory, something shifted inside him. The calm, methodical trader who built his fortune through discipline started to believe he could outsmart the market itself. He thought he'd mastered the game. That's when he broke his own $10,000 rule, the rule that said, if your method doesn't work small, it won't work big. Flush with confidence, he began taking larger and larger risks, skipping the testing phase that once kept him safe. And eventually, the market reminded him, no one is invincible. He lost millions. Not because he didn't know how to trade, but because he stopped respecting his own system. Livermore later wrote about this in his memoir-like reflections, saying, the mistake was not in having lost money, but in having forgotten that I could lose it. That line hits hard. Because it's not just about trading, it's about human nature. The moment you stop believing you're vulnerable is the moment the market finds your weakness. When I first read that, it changed how I viewed success. It made me realize that the real danger isn't when you're losing, it's when you're winning too easily. That's when your rules start feeling optional. That's when your confidence whispers louder than your discipline. And that's what makes Livermore's story timeless. He wasn't just trading stocks. He was trading against the oldest force in the world, the illusion of control.